Welcome to the second live Medianett virtual roundtable. This time it's in partnership with the lovely Masthaven Bank. I'm Beth Fisher, editor at Medianett, the publisher of online trade press titles Bridging Commercial and Development Finance Today, and also the bi-monthly print Bridging and Commercial magazine, and also your host for this session today. So, what better way to start the week by learning from the comfort of your own home and asking our experts your burning questions about bridging. I hope today's discussion inspires you to have a great and successful week. So thank you very much for joining us. Today, we will be giving you the answers to everything you've always wanted to know about bridging, but were maybe too afraid to ask. With the high street struggling with the demand in the run-up to the stamp duty holiday deadline in March, many brokers are turning to the specialist finance market to place their cases within the timeframe. In addition, with many borrowers impacted by the pandemic, customers are looking for lenders who have a flexible approach. This is why it's never been so important to keep educating the intermediary market about bridging finance and when it is or isn't appropriate as a solution. Fortunately, despite the third lockdown we currently find ourselves in, the bridging industry has responded optimistically, with many returning to the protocols previously adopted and utilised so well last year, and also maintaining the momentum that the property market experienced towards the end of 2020. Right, let's steer the conversation to those who are at the coalface of this. So I'd like to introduce my fantastic panelists, which you should all see on my screen right now. We have our lender sponsor, Masthaven, and 4 esteemed specialist finance brokers. So in no more than 2 minutes, can you please all kindly introduce yourself and explain what you and your business does? So Richard, would you like to start?
Thank you very much, Beth, and good morning, everyone. My name is Richard Deacon. I'm the sales director at Masthaven Bank. I've been with the bank 13 years now and have seen bridging finance grow from something that's very small and not many people know too much about to what it is today, with many specialist banks and specialist lenders providing purely bridging finance. And on the panel, I won't steal their thunder, but we've got some specialist bridging brokers as well. And again, when I started, there wasn't really such a thing as a specialist bridging broker. Or a bridging introducer. It was a mortgage IFA or just a sort of general finance person that looked at bridging finance. So it's gone from small, humble beginnings to what it is today.
Thanks, Richard. Alan, would you like to go next? The award-winning Alan. Oh, please turn your mic on if it's not on. There you go.
I didn't realise that. Is that better?
That's better, yeah.
Okay, so good morning. I didn't realise I was unmuted. So good morning, I'm Alan Margolis. I'm the Director of Bridging at Masthaven. I can't match Richard for Masthaven longevity. Been at Masthaven for 3 years. I lead the bridging department, so I guess I'm responsible ultimately for most things that go on. How for timing. It's like broadcasting for you. Look, like Richard, I've been around for quite a while. I've been in bridging since about 1999. I've seen a great deal of changes. I've seen interest rates when I started around 2.25% per month, and I see in effect we're almost pretty much sub 6% per annum now. Seen tremendous changes. I've seen the market become regulated, the rise of the Association of Short-Term Lenders, and Beth, the rise and accompaniment of tremendous media coverage of the sector and a tremendous maturity, and that's reflected as well in our broker panel today, where you'll come across specialists and people who really do know quite a bit about it. So yes, very much looking forward to the panel today and to the discussion.
Fantastic. Laura?
Yes, thank you, Beth, and good morning, everyone. My name's Laura Toke. I'm one of the brokers at SPF Short-Term Finance, and we're a very well-established master broker and packager. I work within a dedicated team that just does bridging and development finance, and we're quite well known in the sector. We've written thousands of bridging loans, and we also do billions of pounds worth of lending per annum. So we're quite well placed to advise on especially regulated bridging, as that makes up the majority of our business. And yeah, I'm really interested today to talk about it and where the market's at with everyone.
Fantastic. Dave, would you like to go next?
Yeah, hi, good morning, everybody. I'm Dave Ottley. I run Balance Business. We're a commercial finance broker based in the sunny southwest, which is actually sunny today instead of rainy, so it's quite nice. We specialise in all forms of finance, particularly property and bridging. And like the other panellists have said, it's something that's evolved over the last 10 years, and it's certainly something that, despite all of us being involved with for years and years, it changes every day almost. There are new entrants, there are new ways and innovative ways we can use bridging. I'm really looking forward to being part of it today and helping everybody understand what it can actually be used for, because it's not just a one-trick pony. There are many, many aspects of bridging finance.
Fantastic, thank you. And Aaron?
Lovely, thanks. Well, first of all, thank you, Beth, for hosting this, and thank you to Richard and Alan for inviting us along to come along to this. I'm Aaron, as you've said, at Master Private Finance, and we believe that these things are instrumental, and it's one of those that will be covered off as we go through some of the questions. But items like this reflect who we are as a brokerage as well, because we want to be transparent and open. We're part of the JLM network. And we're relatively new, but my background is, as Rich knows, is starting Loan.co almost 10 years ago now. And prior to that, I worked for Together as well. So we've looked at all that experience, added it together and thought, how can we make a brokerage which is perhaps a little bit different? We get on well with all the other people who work within our industry. And we think that if there's anything we can do that helps grow the market, whilst also keeping your clients central to what you do, that's having a fair fee structure. I think I'm bored, Alan. I think if we have a fair fee structure and keep the clients central to everything we do, that's effectively what MPF does. Similar to what everybody else does, but for us, our focus is solely on the client and making sure that they're treated fairly and the product that we provide for them suits their needs. Is your dog okay, Alan?
But he goes now. Before he starts barking, which would be even more embarrassing. Very professional, isn't it?
Okay, brilliant. So thank you very much, guys, for introducing yourselves. Jo is having some issues coming in, so we're just going to kick off, and then if she does come in, we'll just get her to dive straight into some of the questions. So we'll just kick off so that we can make sure that we can fit all the questions we have in this hour. If any of our attendees today, any of you guys in the audience have any questions for our panelists throughout, and please do make sure that you ask your questions. There'll be a question/chat box in the corner of your screens. You can ask those questions throughout, and we will answer those at the end. So let's start. So my first question for you all is, bridging's recently been filling the gap to meet the needs of home buyers while the mortgage market struggles to cope with the growing demand. So with a wider selection of brokers now potentially looking at bridging as a viable option, how important is it for the industry to continue its education efforts, despite not being able to be out on roadshows and seminars currently? Richard, would you like to start us off with that one?
Thanks, Beth. Education for me has been one of the most important sort of aspects of my job. Obviously, I know the panel very well. Laura in London, Aaron, 5 minutes up the road from me, but obviously his company's based in Norwich, and obviously Dave in the southwest. So the bridging broker is spread far and wide across the country, and obviously in Wales and in Scotland as well. So it's the lender's job to get out and about, as you quite rightly say, to educate the broker, and the guys we've got on the call today are all very well educated people, but I'm looking at Aaron, for example. He used to work for Together, one of our biggest competitors. It's the classic sort of poacher turned gamekeeper role, where he is now doing the bridging loans, whereas beforehand he used to work for a lender and write them. So I think education is absolutely key. I've been doing it, as I say, for Masthaven for a number of years now, whether it's a real life webinar or roundtable, or in these days a Zoom one. The shows, the mortgage shows that obviously have gone the way of the wind in the last sort of year, where you get out to see many brokers in one hit, writing articles for people like yourself, Beth, and other publications and media outlets as well, and just really getting out, busting some of the myths of bridging is the big thing, but also finding out how it can help them, because at the end of the day, mortgage brokers, IFAs or whatever, they all want to use bridging finance to help their customer, and of course ultimately get paid themselves. So if you can educate someone as to how to get more of it and how to get it more often in their inbox, as it were, then it's worth its weight in gold.
Aaron, what would you add to that?
Yeah, thanks very much. And I think Rich is absolutely right. And one of the things is almost potentially turning this on its head and saying, why aren't you considering bridging? Because we have here a regulated product that is available because people need it. So if you've got a broker who, the classic objection when you're outreaching a broker, say, oh, don't do it. We're not talking to you about whether you do the vertical, it's where does it fit in. Now it's becoming more and more prevalent because of the stamp duty holiday, that it shouldn't just be a one-hit wonder, because these products exist for a certain circumstance. Because you'll find if the broker isn't aware of bridging, they'll say, sorry, there's nothing I can do to help. Another broker will come along and say, yeah, we understand bridging, we've educated ourselves, we'll now look after that transaction and now look after you, Mr. Customer, for the life. So you have an obligation to your client bank to make sure that you are aware of all of the products that are available in the market. But equally, we all have an obligation to make sure that every time we have an opportunity to speak to somebody who says, I've not done bridging before or not done it before, you talk to them about where bridging fits in, because that's what we must do. And that's not about chasing the bottom line. That's about making sure when a client comes to you, whoever that is, it's being serviced. Whether this brokerage gets the deal or not, we all have an obligation to educate, not because of money, but it has to be because you've got to service your client. Because if you look at every transaction in a regulated format, which is coming, which is what people should do and what we do at MPF, you've got to make sure you're taking a holistic approach. We had the same journey when second charges became regulated, and we had an entire education piece where brokers needed to begin considering second charges. And I believe the same applies to bridging finance, where we have a product, in some circumstances it fits, and when it's the right product, you have an obligation to offer that, which is the right advice, whether it's regulated or not. As long as you're applying those standards, then we'll chip away at the people who say, I only do mortgages and remortgages and product transfers. And it's those people we need to get to, but not through any level of arrogance, through friendliness, openness, engaging with them and explaining what bridging does, where it fits in and how it can benefit.
Thank you. Jo, I've just unmuted you, so I just want to see if we can hear you.
Hopefully you can.
Hi, Jo. Amazing. So I don't know if your camera is going to be working, but we can definitely hear you.
That's probably quite a bonus, to be fair.
No problem. Jo, I was going to ask you, why is it so important right now to, for the bridging industry in particular, to continue its education efforts?
I think I agree with Aaron, to be fair, with his comments so far. It's very important. There are a lot of brokers that would perhaps dismiss somebody that's looking for bridging finance purely because of the fact that they don't understand enough, and I think that's where we can step in.
And sorry, we just missed the tail end of that. But thanks very much for that, Jo. Laura, what about you? What do you think about the education industry? Do you think that brokers need to do more, lenders need to do more?
I think it's really important for things like this, like interactive roundtables, webinars, because for me personally, I'm used to working in an office in the city where we've got BDMs coming in all the time. We can catch up with what's going on in the market. I completely agree with what Aaron and Rich said about the stamp duty deadline. I think that's going to get a lot more brokers thinking about bridging. It becomes apparent now that, mortgage lenders, they just can't meet that deadline, and people need to consider it now to save their client potentially £15,000. So I think things like webinars, Zoom meetings. You know, we're all sick of Zoom by the end of last lockdown, but we've got to do it. So here we are. And I think things like this are just going to become increasingly important for mortgage brokers, and just to add to people's what they can offer clients in terms of the breadth of their service, learning about the specialist aspects. So more things like this, basically.
Some of the popular questions that new brokers and borrowers to bridging have are around the cost. So let's start with you, Dave. What do you think are the biggest misconceptions here about bridging costs?
I think it flicks back to the previous point, really. It's a lack of understanding sometimes the actual product, and people automatically, when you talk about bridging, you know, if you're talking on a property forum, or you present to a property group, or you just talk to one of your clients or a new inquiry, oh, but that's really, really expensive, isn't it? And what you've got to do is to explain to the client exactly how it works and the reason it's there, and explaining that while short-term funding is, when compared to term loan funding, more expensive, it's actually a really cost-effective way of getting, you know, a deal and a challenge and an opportunity across the line for somebody in a very affordable way. You know, Richard and I have spoken many times, as we have, about, you know, how far it's come down. I think Alan and others have pointed out that, you know, go back 2 or 3 years, the cost of bridging then to the cost of bridging now is dramatically reduced. When you're talking to people and you're talking around about, you know, short-term funding to get this project to complete it, to allow you to achieve your dreams, you know, actually can be less than 6% annualized in terms of interest rates. I know that, you know, we see these competitive rates across the market. People are really shocked that actually it isn't that expensive. And when you're talking to somebody, you know, it could be a developer exit deal, it could be a light refurbishment project or a heavy refurbishment project, an auction purchase. Because bridging copes with so many different scenarios, it's actually less expensive when people compare it overall to what they imagine it to be. And I think the education piece, the more you can talk about bridging, you know, all of us talk to many clients day in, day out, and it's educating people almost in advance, because what people don't want to do with bridging is run to a line and go, oh, by the way, what's the cost? If they're informed in the first place, they can build that into their project costs and make it really, really affordable. So I think people are actually shocked it isn't actually as expensive as they thought.
Richard, what would you add to that? And just as a reminder for the panelists, if you could just mute yourself while you're not speaking, just to ensure that there is no kind of background noise, that'd be great. But Richard, what do you think about the misconceptions around costs?
Yeah, I think you know, bridging finance is expensive, is what you hear from many brokers over the years. But I always have a retort, and that retort is, compared to what? Bridging finance is expensive compared to a mortgage. Yeah, it is. You can get mortgages, you know, at less than 1% or 1% per annum, and bridging finance, dependent on the lender, as we've said, sort of 6% for the cheaper end of the market, which Masthaven are appearing in at the moment. But there's still lenders out there at 1.5% per month. So it's 10% expensive compared to 1 or 2% of a mortgage. Yeah, of course it is. Absolutely it is. Bridging finance is expensive if you compare it to a mortgage. But I always say, don't compare it to a mortgage. Go and get a mortgage. If you think bridging finance is expensive compared to a mortgage, go and get a mortgage. And then come back to me and say, well, Rich, I can't get a mortgage. That's my problem. I can't get a mortgage because the property is unmortgageable. You know, the mortgage company have said it needs kitchens and bathrooms and updating and modernising before we can lend on it. Okay, so you can't get a mortgage, so their bridging finance is expensive then. I can't get a mortgage because my credit isn't sufficient to warrant the mortgage that I'm after. Okay, so you can't get a mortgage. My income doesn't support getting a mortgage, whether it be self-employed, whether it be dividends or shares or whatever. So you can't get a mortgage. So don't compare bridging finance costs to that of a mortgage. It's its own transaction. And to be fair, you know, as Alan alluded to earlier, you know, the days of 2% per month, I mean, unfortunately, they do still exist. Some lenders do still charge that amount. But for the majority of lenders, and certainly the lenders, you know, via Medianett, the rates and costs are actually quite good. And certainly when you can't get a mortgage, it's a cost. So bridging finance for me isn't expensive. It's a transactional cost that you've got to weigh up, and that will you'll either think, okay, yeah, that transactional cost for buying that property because it needs a kitchen and a bathroom is worthwhile to me. I'm going to make enough profit, or if it's to live in, then I'm happy to pay that cost to purchase that property to live in. So it's not expensive, it's a transactional cost, and you shouldn't compare it to a mortgage.
Thanks for that, Richard. Aaron, what would you add to that?
Yeah, I think I'd expand again on what Richard said. So there's multiple facets really. There's a long shadow of sin cast over bad behaviour whenever it's done, and we have to then go and unpick that with proper standards. How many unregulated bridging lenders are there in our industry? And anyone who is leading a brokerage or is a broker themselves will know from the number of messages, are we all performing to the same set standards and behaviours? No is the answer to the question. So we've got an obligation to take all of that information and communicate it to the first charge world, and recognise that while we're in the same financial pool, we actually talk a completely different language. And like, as Richard said, you've got to be able to converse in their language as much as they, because what drives them? Cost. And it's the rate. Cost and rate. And that's what you hear. So you can't compare apples and pears and then say, as Rich said, well, this is too expensive. So well, that product isn't available. But you can't argue them down saying, well, it's not available. It's your only hope. It's all you've got. You've got to be able to explain, actually, we're not looking at monthly transactional costs. We're looking at the overall cost. You know, as an example, you've got a client who's downsizing to a property. They bought it in 1975 for £5,000, and it's now worth £500,000. And we're talking about a £10,000 overall cost over 12 months. Really, when you compare it to how much they've increased in value over time, is that really, in the grand scheme of things, too expensive? We explain to somebody, well, these lenders need to make their money over a 12-month period rather than your bank and building society, who make considerably more over a 25-year period, especially for all those who are still on their SVR rates. So it's easy to chuck stones either side and say, well, you're expensive and you're expensive, but there are areas where we all need to get better on, and one of them is in educating people on what the key metrics are for a bridge, and recognizing that what a first charge broker, the classic broker, wants is a little bit different to how it works, and how we can bridge that gap in explaining the product and how it suits their needs is how we'll increase business volumes.
What do you all think that the key differences are in terms of processes and fees between a mortgage and a bridging loan? We've obviously discussed the costs here, but what about the processes and fees? And why would a broker consider or not consider it as an option for their clients? I'm going to start with Jo, if this sounds okay.
Hi there. I don't think you can compare. I don't think as a broker, if somebody wants a mortgage, you should be comparing a bridging loan with that particular product, because of the reasons that we've just said, the cost implications. Bridging is a specific product and you get a specific result at the end, whether that be bridging a gap because you haven't sold your property and you don't want to lose your dream home, whether you've got works to do to a property. There's so many different ways around it. I don't think that you should be comparing the two. I think you should be focusing on the benefits that bridging has to offer to the clients.
Thank you very much for that, Jo. Alan, what would you say are the biggest differences in terms of processes and fees?
Sure. So look, there are some commonalities. For instance, you need a valuation, whether it's an automated valuation, which works brilliantly for some cases, whether it's a full valuation. You need to sign a mortgage deed. There's going to be an involvement of the solicitors. The customers need to sign a legal charge. Those things are common across mortgages and and bridging loans. But really, I agree with what's been said before. This is a very different beast. I always say to people, I've said for many years, it's not about the money, it's about the service. Bridging loans, short-term loans, are about the service. You have the ability, you or your introducer, both, you have the ability to pick up the phone and discuss the case and the intricacies with the actual underwriter. And if the problem is an ability to escalate it up the chain to try to resolve the problems, you're not dealing with a call center, you're not dealing with a product where you invariably have to fit into a very neat product silo. I can't go to Santander and say, listen, lovely product you got there, I don't know, at 1.8% per annum, but did you know that? But you're not going to have that conversation with the mainstream lender. They're going to say, well, I'm terribly sorry, Alan. Love to hear your story, but actually that's not how we work. You take it or you leave it. In our world, there are nuances, there are issues, there are things that can only really be resolved or understood by people. And that's what this is about. It's about marrying an understanding of someone's requirements with a brilliant service to get them what they need, which ultimately is the funding to facilitate something that they want. And there's an opportunity cost very often for not taking out the bridging loan that was mentioned. So yes, while of course there are some similarities, in how many products in this day and age are you able to pick up the phone to another human being in the financial services sector, talk through the issues, get them understood, work a way to find a solution to a problem? Because that's what all of us are absolutely experienced at. The longer you've been in it, the more you realize that very few of our customers fit neatly into boxes, and now we are there to try to make things work for them. And that's what the short-term loans and bridging loans are about. And it's been really well articulated by all the other people here so far. The ability to do something, to achieve something, that the lender has to earn their money over a very short time frame. This isn't a long-term relationship. So I'm passionate that what we're selling really is not money. I'm absolutely passionate that what we're selling is a service.
Thanks very much, Alan. Other common questions revolve around what bridging can and can't be used for. For example, the borrower is a limited company or the security is their main residence. Laura, what surprises new brokers or borrowers the most about what this type of finance can and importantly can't be used for?
Sorry, just have my microphone on. I think typically people are quite surprised by the fact with bridging, often we tend to roll up the interest payments. So we don't have to go through affordability or proving income. And I think that's one of the things that most surprises new brokers when we speak to them about a case. They think it's good from a cash flow perspective that the clients don't have to service the monthly interest. I think another thing that surprises people that we can do is we can use more than one property as security to get 100% of funding. And again, I think that's something that's really positive and that people are generally quite happy with. In terms of things that we can't do, I mean, typically bridging lenders are much more cautious on loan to value than mortgage lenders are. So because it's asset-based lending. So if someone comes to us and they're, you know, a first-time buyer looking for 90% at auction, unfortunately we can't help with that. You need to have a larger deposit, but if there's other securities in the background, great, we can leverage against those. And I think there as well, they're surprised by how quickly we can turn around applications. Normally they take about 2 to 3 weeks, but we've done them as quick as a couple of days before, whether circumstances have dictated it. So I think those are things that really surprise people.
Thanks for that, Laura. Dave, what would you add to that?
I think it's amazing, as I said previously, about what you can actually use bridging for. Alan and other people and Aris have spoken about. One of the biggest advantages you have is that direct line into the lender. We live in a world of term loans where it's very difficult sometimes to speak to lenders and even more difficult to speak to the decision maker. The great thing with bridging is that you have the ability to be flexible, to talk to the lender, to challenge the lender, to be able to come to, you know, Richard Deacon at Masthaven and say, these are my timescales, my client's timescales. This is the situation. And to very quickly get either a yes or a no. If you get the yes, the great thing is that bridging lenders are very agile, you know, on the whole. They're very much focused on hitting deadline dates. So whether that's an auction purchase, whether that's a new home purchase, whatever the circumstances, the lenders are far more agile, mobile, receptive to the challenges the client faces. And as Aaron said earlier, that's our main concern as brokers, making sure our clients' needs are resolved. In terms of what you can use it for, bridging, from many years gone by, which could have been used for one or two reasons, nowadays, bridging's there for a multitude of reasons. We spoke earlier about light refurbishments, heavy refurbishments, auction purchases, developer exit. All of those things are achievable. So when you're talking to your clients and you're finding out their own personal set of circumstances, challenges, you can very easily fit and mold that into the lenders that are available. And there's so many good lenders, and things do change daily, weekly, monthly. You've got certain lenders on refurbishment products now that will lend up to 85% loan to value. Some will, some won't. But the opportunities to challenge the market are there. And certainly over the years as a broker, the broker community on the commercial bridging side is very, very friendly. It's really, really open. We all get on with each other. And you can learn so much from other brokers when we meet up, when we talk, when we come on seminars. It's a world where we share information for the benefit of the client. So in short, there's a multitude of reasons you can use bridging. You can challenge the lenders, and we do use the word challenge. I've known Richard many years. There are still times when I will ring him up and say, I've just sent you an email, please look at this, I need to talk to you. And it's that quick response. It doesn't take a long time to get a decision. And even if that decision's a no, and you've got to then move on to another lender, it's the speed at which it's delivered. So it's so flexible.
Thanks for that, Dave. The next question I have is probably one for you, Richard, and I'm sure is a question high on the agenda for brokers. How much can brokers expect to get paid for introducing a bridging deal, and how can they expand their business in this particular sector?
Yeah, $64 million question, Beth, that one. The generally accepted rule of thumb on bridging remuneration is a lender will charge an arrangement fee. Masthaven charged 2%, and that's 2% of the loan amount. We then pay a proportion of that 2% away. To some brokers, we pay it all away. It depends on the deal, it depends on the broker. But what is very worthwhile talking about is the fact that it is about what you get paid for your job and for what you do, but also it's again comparable to what you get paid for mortgage. Now, some mortgages you might get paid hundreds of pounds or £100 depending on the size of the mortgage, and it's still a fair bit of effort to put into that work to get the mortgage done. Brokers can and often do charge an additional broker fee, and this is either a poundage amount or a 495 or a 995 or a 1995 or a percentage amount, and again typically that's an additional 1% as a broker fee. And again, what you've got to think about is there's different layers of the introduction to the lender. So it might be, for example, one of the guys or girls on the call today will come to me with a case, but then there's a broker that has fed that into them. We're talking about bridging finance, but it still is a tiny part of the market overall. And if you're a mortgage broker who simply doesn't understand bridging finance, or to be frank, doesn't want to understand bridging finance, but you've got a lead that you might think is worthwhile, then they would pass that on to a master broker. They then might charge the fee for themselves. They might want to split that fee with the introducing broker, or there might be an upfront fee for giving the advice. There might be an upfront fee when a set of terms is produced or upon an offer. There's a whole myriad of ways of sort of fees being charged and fees being earned, but typically it's an arrangement fee by the lender, and again typically it's 2%, and then that arrangement fee is apportioned to our introducing broker accordingly.
Thanks for clearing that up, Richard. This one I'm going to pass to Jo. Is there such thing as a silly question in bridging? What other common questions or myths have you heard from brokers and borrowers that are new to this type of finance, and how can they best find out the answers?
Okay, I personally don't think there is a silly question. However, that said, sometimes some of the things we are asked tend to be quite daft. So essentially, I think it all boils down to educating brokers. I'm very open. The brokers that I work with as a master packager, I would be happy for them to ask me rather than turn away something that we may be able to help with. I think one of the things from everything that everybody said, we didn't mention about the fact that, you know, you don't have to pay off any existing borrowing against properties. You know, there's a few brokers, again, the education piece, where they feel that perhaps it should be paid off. Now, to my mind, if somebody's going to increase their debt by 100, 150,000 for no need, when doing a second charge perhaps on their main residence, and then again on the onward purchase, will be able to still achieve the result for the clients. I think that's a great thing. So I know everybody said it is educating people what benefits bridging can offer. So just going back to your question, Beth, sorry, I don't think there's any daft question. It gets a little bit tiresome if somebody's asking you about loan to value, but what we have to bear in mind is not everybody has got the experience of years under their belt. So perhaps somebody's newly qualified. You don't want to make them feel bad if they're coming to you with a bridging inquiry. So I don't think any question's daft.
Thanks for that, Jo. What impact does it have on the bridging lending process if questions are not asked early? And that's, you know, from borrowers, brokers, and lenders. Richard, do you want to kick us off with that one?
Yeah, it's the bane of everyone's life, to be honest with you, Beth. You know, again, going back to education, one of the things I always say is tell me warts and all the story from day one. It's very rare that, you know, something will come out of the closet, as it were, you know, the day of completion that absolutely smashes the loan out of the park. I mean, that's quite rare, but you'll find, you know, and let's be honest, it's typically credit, adverse credit. For all that, yes, we do credit searches, and nowadays obviously customers can do their own credit searches, which sort of wasn't about years ago. But most bridging lenders will accept, you know, a certain form of adverse credit. You know, if you've missed a credit card payment in 1973, you know, some people will have sleepless nights about that, but there's a home for it. You know, if the property is unmortgageable, if they've done works to the property that maybe haven't had the correct sign off, if they haven't had the correct planning in place. We talked earlier about the use of funds for the loan. That's a key one, where people think that I don't want to tell them the truth why I'm raising money on my house. And as Jo's just alluded to, second charge bridging or standalone second charge bridging is a huge area of the market that a lot of people don't sort of see or don't understand, because it's not just raising for capital for your business. You know, some people say, oh, I'll tell the lender it's to raise capital for the business, I'm actually going to put an extension on my house. Or some people say, I want to raise money to put an extension on my house, but I'm actually going to use it for business purposes. So, you know, the truth will always come out. And we just say to brokers, please, please, please tell us day one, warts and all, what the situation is with the bridge. That Dave just said a minute ago, you know, he's often phoned me up or emailed me saying, Rich, you know, this is the case, this is how it is, you know, it's a bit of a dog with fleas, can you do it? And I'll say yes or no very quickly. If it is a yes, I want to take it, you know, I want to take it and I want to keep it for Masthaven. If it's a no, I don't want to waste anyone's time. You know, Masthaven's sort of appetite over the years has maybe changed since we've become a bank, but we're still looking at all sorts of cases that maybe other lenders might not look at, and certainly quite a lot of brokers don't realise that a bank can do. So I think it's definitely one to sort of say to introducing broker, give me the story, warts and all story. Why do they need bridging finance? You don't want bridging finance. No one wakes up going, well, I want a bridging loan. You need it, and you always need it for a reason, whether it is, as say, adverse credit, unmortgageable property, or whatever it may be. So find those reasons out. Don't be afraid of a no from a lender. There's dozens and dozens of good lenders out there, and you'll pretty much find a home for it.
Thanks, Richard. Some good advice there. Alan, obviously speed is one of the biggest USPs of bridging. It's one of the top three. How else can borrowers, brokers, and lenders alike speed up the bridging lending process?
Sure. So, I mean, let me echo what Richard said. There's nothing, first of all, if there's nothing worse than for a lender, and us on the credit side of the business as well, to find out something that really we could have been told on day one, because you really run the risk of then us asking, well, what else have you not told us? So on the basis that the borrower's made full disclosure, warts and all of everything, which is by far the best approach, what can you do to speed up? Well, I guess the thing is just not to dilly-dally on certain key moments in the cycle or the process. And one is, if a full valuation is required, get that fee paid, make yourself available for the valuer to be able to come around, facilitate that valuation. We do use AVMs, but it's still for a minority of loans. So we find that there's a delay in valuation. Why is that so key? Because until you've got that valuation report in your hand, you don't know if there's anything that you will need to be aware of or to resolve or to investigate. And you can't begin that process until you have the valuation report. So I can't stress enough the importance of getting the valuation in as soon as possible. So that allows the underwriters to resolve any issues, if there are any issues to be resolved. Then the other one naturally is solicitors, which is a whole is a whole round table of its own, quite frankly. It could be a single topic round table. But in terms of solicitors, it's about the borrowers engaging their solicitors early as possible in the process. I realize there's some that borrowers don't necessarily want to do too early, but you have to look at the nature of the transaction. Often the solicitors are engaged anyway, because there is something going on and we're just helping to facilitate that. But it's about the borrowers, again, making sure their solicitors know what's going on, make sure that they can put their solicitors in funds if that's what's required as well, and just keep that moving. The worst thing, the biggest barrier that we have to completing loans is really communication. Really. And it's also communication at all sort of levels. So that's the lender to the broker, it's the lender to the borrower, it's the borrower to their solicitors, it's solicitors to solicitors, and I could go on. But if you can deal with those two particular pinch points of the valuation report, get that in, get that valuer in as soon as possible, get your solicitors instructed on board so that they're ready for when the lender's solicitors send over their lists of requirements, which, to be fair, typically it's not rocket science. We're still looking to take a mortgage. Then those are the major pinch points in the process. Got to tell you, like, technology has moved on amazingly. When you think back, for those of us who can go back, our ability to process loans is phenomenal, and to get information. Pre-Google, you had almost no information on property. As soon as you get something in, you can click on it, you can walk around the street in a virtual manner. Lenders are able to move really, really fast, but there are still these fundamental choke points that sometimes that still prevent loans from moving as quickly as they can. But I hope that kind of gives a sense of what you're after, Beth.
That's great. Thank you very much, Alan. My last question is one for our broker panelists. Last year was obviously a considerable learning curve for all of us. As experienced bridging brokers, what new questions do you find yourself asking lenders? Laura, if you want to kick us off, I want to try and get an audience question in before we round up. So if we can all answer in roughly a minute, that would be fantastic. Thanks, Laura.
No problem at all. So what I would say in terms of what we're finding now, what lenders are asking for more that they weren't before, is they need quite a lot more comfort around the exit route. So whereas before the pandemic, we could say that the exit was going to be sale of property and the property would be marketed after a couple of months of completion, we're looking now at the sales times for similar properties, and we're also asking for marketing reports from the agent before sometimes even getting terms agreed. And in a lot of scenarios as well, the lenders do want a backup exit strategy being refinance. And if it's refinance, they might want 2 credit back dips from, let's say, buy-to-let mortgage lenders. So in terms of the exits, we're having to look at that in a lot more detail up front, and just ensuring that if the property isn't going to sell in 12 months, they are going to be able to get out of it, especially if it's a regulated loan, because it has to be the right advice for the client, and it has to be, sensible lending from the lender's perspective. So I'd say those are the biggest changes that we're seeing from a broker perspective in terms of getting deals agreed.
Thanks for that, Laura. Aaron, what new questions are you asking your lenders?
Yeah, I mean, new questions that I would be saying are, I would actually say it's more focused around technology, because the future is technology. Are you a lender that has that allows you to API in and use a portal, upload client documents, let the client see their own file, or are you still reliant on a form being filled in that needs to be scanned and then you come back with some terms, or are dealing only in email? There's a cross now between whether or not you are tech savvy, and I believe those lenders will start to really see the benefit. And moving forward, that's where I see that we need to go, because as we are getting busier, we rely on our lenders to modernize at the same time, because if we are seeing 10 dips a day that we need to write out, it's a significant drain on time and resource that the broker has to carry. So for me, I would say it needs to be the focus on tech. That's where I look now, as to the lenders who are being relied upon because they've got the right products. Are they now investing in their own internal services to make sure we can introduce cleanly, safely under GDPR, and that what we've keyed on is what we get back, and we can communicate, avoiding email entirely.
Thanks very much for that. And Dave?
Sorry about that. I think one thing that we've not spoken about is the sort of the rise of the regional lender. And there are some niche funders now all over the country. In the past, it used to be there were lenders that, like London and the M25, certainly in all parts of the country now, there are a number of niche funders. So again, the questions we've been asking is, how do you operate? Making sure we understand, as Aaron was pointing out, are they tech savvy, not tech savvy? What's the differences, and where's the benefits for the client? Often, if there's people in a certain geographical location that like funding in that particular area, it can be quite a slick process, not necessarily tech savvy, but a little bit slicker, a little bit quicker in terms of valuation. So we're asking the lenders more and more how they're altering. Masthaven have become a bank. Other lenders have changed their ways in terms of application or process. So those are the questions we're asking lenders more, to make sure we understand the options for our clients, because it is important and it does vary.
Thanks very much for that. Jo, what would you add?
What can I add? Everybody's covered everything off. I 100% with Laura. Agree with Laura with regards to the exits and the way lenders are being more critical of the way somebody is going to lend. Going on the market, a lot of lenders are now stressing that the property has to be marketed if that's the exit route prior to the completion of the loan, or on completion of the loan, should I say, sorry. I agree with Aaron as well with regards to technology. Clearly, I'm not one of those people that is very good at technology, but I think it does make the process far slicker with the online portals now that lenders are using. So, that's great. As Dave said, geographical areas as well. I think with regards to sort of the basic questions that I'm asking lenders is, will this qualify for an AVM? Do your clients have to go in and see their solicitors? Are there things and ways around these processes that will make things slightly quicker? I think that's all I could really add to that, because everybody's covered pretty much everything there.
Thanks very much for that, Jo. Right, we've got 2 minutes, but I just want to ask one quick audience question. Richard, this one's for you. We've talked about the common questions that you receive. What other questions do you think brokers need to be asking their lenders, which they might not have had to have done before the pandemic?
Yeah, that's a good question. I think, you know, the guys have covered it with regards to exit route. All bridging lenders are going to be wanting to protect their money. You know, anyone can lend money out. Getting it back's not so easy. You know, we've seen the demise of many bridging lenders over the years who, you know, have gone the way of the wind. So I think the exit route is the main thing. And I think it was Laura who said that, you know, a lot of lenders are asking for a plan B, and rightly so. You know, for all that I'm the sales guy, and it is easy to sort of get the money out the door, it's getting it back in again. So specifically with, you know, if the exit route is sale of property, I've been trying to sell a property myself that's taken over 2 years, and it's a normal residential house. So I know the pitfalls of trying to sell a property, and obviously in the pandemic, things have changed dramatically. The argument is that in some areas that the house prices and the sales have gone through exponentially. You know, they've grown massively. But I think as a lender, you do want more time, and that's what you're trying to buy yourself is time. And if, you know, plan A doesn't go to plan, then what is plan B? And if it is refinance, you know, as Laura alluded to, again, you do want surety of the funds that the client can get the refinance. And if refinance isn't an option, for one of the reasons we've talked about before, whether it be adverse credit or proof of income or whatever it may be, well, how are they going to pay the bridging loan back if it does go over the 12-month period? So exit route is always king, because lenders do want their money back at some point.
Thanks very much for that, Richard. And it's bang on 12, so I don't want to keep anyone else who, you know, you might be needing to shoot off to other things. But thank you everyone for attending today, and thank you to our amazing sponsor, Masthaven Bank, and also thanks very much to our fantastic panel. You guys did a brilliant job dispelling some of our industry's biggest myths around bridging. So thanks for taking time out your busy schedules to be here, and I also want to thank our audience for joining us, and I hope we have started your Monday off to a good start. Just a quick note, we will be publishing this roundtable in full next week on B&C for those that weren't able to make today's live event. And also, if you fancy replaying bits you may have missed today because you were either answering the door to Amazon deliveries or in between homeschooling kids. So if you enjoy this one, make sure you attend our next Bridging Virtual Roundtable, which is next Thursday, the 18th of February. That one will be hosted by my wonderful colleague, Karen Schroeder. We are hosting multiple events every month this year. So if you'd like to sponsor one, make sure you drop me an email at beth@medianett.co.uk. I will drop that into the comments section right now, so you've got that information. There you go. So spaces are booking quite quickly, so make sure you get in touch soon. And also for more information about the bridging industry, if you didn't get enough today, I'm sure you did, our Bridging Commercial magazine has gone to print today as we speak, and in this we reveal our 2021 power list, so make sure you pick that up and get ready to be inspired. That is expected to land approximately on the 18th of February. So if you haven't already subscribed, make sure you check online around that date, because we will be providing an e-copy. Right, I won't take any more of your time. It's 12:02. Have a fantastic afternoon and rest of your week, and we look forward to welcoming you to our next event.
Thanks very much, Beth.
Thank you.
Thank you guys. Nice to see you all.
Cheers. Bye.
Bye.